It is time for your intraday update on not only the markets, but AMC as well. The data is moving today. The stock is moving today. What do you need to know? That's what we're going to get into in just a few short seconds. Let's get to it. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Now, let's first start off with some of the important information that is happening here on the day. It is not that the international courts have issued an arrest warrant for Putin. Good luck with that. It is actually that First Republic shares are falling more than 20% yet again today, dragging down regional banks. This comes after JP Morgan, Goldman Sachs, Morgan Stanley, Truist Bank, M&T Bank, Capital One, a bunch of other players, Citi, Wells Fargo, deposited billions and billions of dollars, all totaling all in all about $30 billion into First Republic that is not insured. So if this bank were to fail, then these other banks would not get their money back. It was supposed to be a show of confidence that they were confident in First Republic, and you should be confident in them as well. Looks like it's not working today. These regional banks are getting destroyed yet again, definitely not helping out sentiment in the markets, not helping out the S&P today, down about 1%. NASDAQ down about 0.5%. Russell 2000 continues to be the bleeder every single day, down about 2.5%. As you know, AMC, the largest component of the Russell 2000, so it's kind of hard for AMC to really catch a break, given the Russell 2000 is down like 2.5% every single day. It's honestly, like, is it programmed at this point? Like 2.5% is like where we've been down like the last 3 days in a row. I don't know. Pretty interesting. Now, as far as the big news that came out today and the data that we got, it is the Michigan Consumer Sentiment Survey. This was a complete failure, and this is giving you some of this pain in the markets today. As you can see, consumer sentiment slips in March, inflation expectations ease, and manufacturing production edges up 0.1% in February. If you look at this part, it says the University of Michigan's preliminary March reading on the overall index of consumer sentiment came in at 63.4, down from 67 in the prior month. Economists polled by Reuters had forecast a preliminary reading of 67. So looks like the consumers, the average citizens, not feeling so confident, right? The sentiment is not looking so good. Now, inflation expectations on the 1-year basis fell to 3.8%, the lowest since April 2021, from 4.1% in February. Its 5-year inflation outlook dropped to 2.8%, falling below the narrow 2.9 to 3.1% range for only the second time in the last 20 months. That is very good. But think about it. Consumer sentiment falling. Inflation expectations falling. Why are they falling? A recession. Recessions bring down inflation. Recessions have a negative consumer sentiment. That's exactly what's going on here. It's just fears of a recession, and that's not what the market wants to hear. The markets, in all reality, want to see the economy do good and inflation go down. It doesn't look like you can have the two. Now that you have bank failures, it's really pushing this recession to the forefront. I don't really think there's a huge argument now of if we're going to have a recession. It's when we're going to have a recession. So I just want to make this quick note for everyone out there. If you just got a job over the last 2 or 3 years, really ever since COVID, especially with like Amazon or some of these other more techie kind of companies that overhired, let's be honest, or just maybe not. Maybe you just have worked at the same job for a while. You want to save money right now. You want to have as much access to capital heading into a recession as possible. Recessions have made more millionaires than lottery winners combined. So you want to have capital available to you, and if you don't right now, you want to start saving for that ultimate recession that's coming probably early summer. Midsummer is where I would put my bet. So that is what is happening today, not helping the markets out. at all, more recessionary fears, and that's really it. We didn't get much else as far as economic data or anything else. You are seeing, and some people are going to hate this, a lot of Americans are going to hate this, a lot of your girlfriends and wives probably going to hate this. Biden is introducing a bill to ban TikTok, to give him the rights to ban TikTok if they do not sell their stake. If Binance does not sell its stake, or Bydance, I think, that's also not necessarily a good thing. So there you have that. As far as AMC is concerned, the stock is down 3% today. Considering the Russell 2000 is down 2.5%, I think it's a pretty good day overall. It could be a lot worse, and we've seen it be a lot worse in the past. But it's really not happening like that today. So AMC sitting at $4.26 per share. The live short interest of free float sitting at 24.29%. Very, very high. Live short interest, or the amount of shares currently sold short, sits at about 125.5 million. Cost to borrow average 340.5%. Cost to borrow max 353.8%. And cost to borrow minimum 286.49%. Cost to borrow numbers from interactive brokers at 167%, about 15,000 shares that are currently available. Now, these numbers are very high. And I've talked about this, I think, in the last 2 videos, but I'm going to touch on it again here in this video for anyone that did not hear that. Cost to borrow rates should not be spiking after a major event like what we've seen March 14th with the shareholder vote. The cost to borrow rates should have actually plummeted. Instead, the cost to borrow rate on interactive brokers is up almost 100%. Cost to borrow rates across the board on Ortex, right? These estimates are up 100%. At least, right, since this actual vote on March 14th. Typically, that should not happen. That should have been seen as like a earnings event, right, where you get a company that reports earnings, but before they report earnings, you see the premiums go insane. You see the cost to borrow rates go up. Well, for good reason, because the stock's probably going to move, right? It could move big. Who knows? You got to account for that if you're a market maker, if you're lending out stock, right? And usually after earnings, those cost to borrow rates would fall, the premiums would fall, and you're seeing the opposite of that happening with AMC. So I think it goes to show there's going to be, number one, a lot of volatility, but I do think it is showing you that you are due for this bounce. We're obviously not getting it here today. How can you get a bounce when the Russell is down another 2.5% today? It's like the 3rd straight day of dropping 2.5%. Absolutely wild, to say the least. Does show quite a bit of fear out there in investors, right? The first thing, or I guess the riskiest thing you could invest in would be like the Russell 2000, not necessarily as an index, but the companies in the Russell 2000. Those would be the ones that are really pushed and would struggle during a recession when that ultimately does come. So I think you're seeing a lot of recession fears today, guys. As far as the option activity, 25 orders totaling $1.81 million, positive order value of 15%. Again, not really out of the norm to see a positive order value that low. Now let's take a look at what markets are currently expecting for the next Fed meeting. That is going to be on next Wednesday, March 22nd. So you are expecting, as of right now, a 1/4 point rate hike with a 72.3% probability. A pause is priced in at 27.7%. So if you get, for whatever reason, sentiment switching or economic data suggesting the Fed should pause, or more bank fears more specifically, and you do price in a pause, well, that's what the Fed is going to do. Whatever is over 50% is what the Fed always does. So it looks like right now you're going to get a 25 basis point rate hike coming next week. And that's going to be the major catalyst. That's really going to be the make it or break it moment for this market, because let's be honest here, there's no good outcome of next week. And you've seen people like the head of investing, or head of strategy at SoFi, right? Liz Young specifically is her name. She said there's really no good outcome to next week. If the Fed raises rates 25 basis points, it looks like they're ignoring the banks going bankrupt. It looks like they're oblivious to what's going on, and they're just going to be tightening furthermore into a recession. If they pause, I mean, that's showing that maybe the issue's a lot worse than we are thinking. So there's really no good outcome for next week. So I want you guys to be fully prepared for that. Probably going to mean some more downside, but from now until Wednesday, you want to watch the Fed rate monitor tool. It could help you make a lot of money, especially given the Fed meeting next week. And we're also going to get a new dot plot too, which is pretty much where Fed members think they're going to get rates to when they're going to cut rates, right? It gives you an outline of where they think GDP is going to be. Last report we got was plus or minus 0.5% GDP. So pretty close to that recession was the average consensus, but narrowly avoiding it. If the Fed starts to expect we are going to have a recession in 2023, also not going to be such a good thing for the markets. And that's probably why you're seeing inflation expectations going down, why you're seeing consumer sentiment going down in the survey that we've seen today. So be fully prepared for next week. It doesn't look like good things are coming for the markets. I would be very surprised if the Fed can somehow pull off what they need to do, what they need to convey to the markets, and the markets still be green off of that. I would be personally surprised. Now, if we take a look at the FTD numbers, today you are seeing 6.8 million FTDs that did come due. On Monday of next week, you're going to have 7.3 million FTDs. On Tuesday, almost 12 million FTDs. On Wednesday, 10 million FTDs. On Thursday, almost 11 million FTDs. And then on Friday, another 10 million FTDs. So this can give you a little bit extra oomph to the upside, but it's not going to be the sole reason why we rally at this point. If the Russell is down 2.5%, believe me, a couple million FTDs, not going to be the reason why you rally. Now, I do think, granted, you have fallen a lot recently. Next week, you should get some kind of bounce in some form or the other to the Russell 2000. If not, the S&P, the Nasdaq, and the Dow will likely catch up to the Russell 2000, and that would just make for a pretty bloody market next week. So I think you either catch a bounce in these broad indexes to catch up with the Russell 2000, or they fall to catch up with the Russell 2000. I don't think there's any way really out of that. Good thing could be that AMC has already felt a lot of the pain the markets maybe have to feel next week. So that could be a positive thing. It's very hard to speculate on exactly if that is the case, though. If we take a look at the option activity for today, 20,000 calls currently in the money. Out of the money calls at 721,000. Puts in the money 313,000 and puts out of the money at 350,000. These numbers are insane, and a lot of this was due to the March 14th vote. Now that you have the litigations that will go until April 27th, you'll get the first court date, then you'll probably get another court date, right? You're probably going to see a lot of these options get rolled over today to down the line, right? So you want to see where the options really start to populate down the line. Maybe it's April 21st, considering the court date is April 27th. It wouldn't surprise me if May 19th becomes the next big option expiration to watch. And you can even see on the put side, dude, all of these option expirations are massive. Even the one for April 21st, you got almost 200,000 puts on the money, 459,000 puts currently out of the money. For that May 19th option expiration, 191,000 puts in the money, 201,000 puts out of the money. For the following expiration, June 16th, you got 240,000 puts in the money, 302,000 puts that are out of the money. If you can get a bounce here, you'll see a lot of these puts go from into the money, out of the money, and that will give you buying pressure. So I think AMC is literally a ticking time bomb in regards to the option activity that we're seeing. The overall sentiment here will flip, and the closer you get to April 27th, you will see more uncertainty of these court proceedings, and that will give you some room to run to the upside. Now, we can sit here and debate all we want if this is a positive thing or a negative thing for AMC. I'm really neutral on the whole thing. Like I said, my stance has never really changed in that. I think in the short term, this court date, probably not such a, well, this whole reverse stock split, probably not such a bullish thing. But I think in the longer term, if AMC does raise enough capital, they pay off their debt, at that point, there is no short thesis. You would get a MOAS. You would get a short squeeze. Now, who knows where the price of the stock is at that point and how high it could go. Either way, I'm liking the risk to reward setup that we are still seeing. And after all, at this point, I mean, you should have sold out before March 14th if you were going to sell out, if this was a short-term trade for you. That's like me, you know, buying First Republic Bank. At this point, I'm just going to sit on it because you already lost. I mean, you're screwed at that point, right? Hopefully you didn't buy too much, or you have a longer term outlook. For those of you guys that have a longer term outlook, you've been here for a while, then you'll be just fine. So there is all of that, guys. Not too much to actually say as far as company specific news on AMC. S&P 500 still down about 1% on the day. AMC down about 3% again. Russell 2000 being down 2.5%. AMC down 3%. Not a terrible day. AMC is fighting here. It does not want to head back to the lows, and I think that is a very positive thing. And I do still think you are in for a bounce above this 450 level, and I do expect to hold the 450 level. If not, by April 27th, make your way back up to at least $6 per share. Now, who knows exactly how the court proceedings are going to go, blah, blah, blah. So play accordingly. Don't gamble with money that you cannot afford to lose. So there you have that. Where you really want to get above is at least this line at $4.50 per share. This is the downtrending line of resistance that we have had for a very long time, right? Ever since the June 2021 rally. That's a very positive thing if you can get above that, guys. So that is pretty much going to do it here in this video. That is what you need to know so far on the day. We will be back at 4 o'clock to wrap up your day and give you all of the other information that you need to know. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.